Hello, I'm Greg Hunter. Thank you for joining us today on USA Watchdog. Eric Sprott, Sprott Asset Management, the head of the company, is with us. And Eric Sprott, good to have you on USAWatchdog.com.
Well, Greg, happy to be here, and I can tell you that I enjoy many of your interviews, and you're adding a very useful service to those of us who don't buy the mainstream media.
Well, thank you. That's very kind of you to say that. I got to tell you, and I used to think Bloomberg wasn't in the mainstream media, but I think they are. You were in an interview recently, just a few days ago, on Bloomberg. And, you wrote this long research paper, and the title is, Do Western Banks Have Any Gold Left? You wrote about, 6 weeks ago or so. And they must have got together and said, let's not talk about this. Because, when you brought up the number one fact that, and in your paper, and I want you to go into this a little later, but I thought this was telling with the mainstream media, central bank's gold is likely gone with no realistic chance of getting it back. I mean, that's after this big, long research paper with sources and some near-term historical research and all this information about how you came up to, the mine supply is not nearly what demand is and who's selling the gold. These two hosts, journalists, I don't even want to call them journalists, first out of your mouth, you bring this up and they say, oh, yeah, I hear the word gold bug. I hear the word conspiracy theory. I mean, talk about dissing you. And then they, give us other reasons to buy gold. Well, let's talk about gold. And first of all, I want to get this out of the way. You can't talk about silver. You have a deal in the works that involves silver, and regulations say you can't talk about silver. So we're not talking about silver today. But let's talk about your article in gold. It has this situation with central banks likely having no gold. Is it any better?
Well, Greg, it's interesting. I've always been a student of the physical market for gold. And as you well know, and I'm sure your viewers would know, that there's the paper market and there's the physical market. And the paper market is considerably larger than the physical market. There's been examples where 1 year's silver production in the world will trade in 1 day on the COMEX, and it just makes absolutely no sense. And I always ask people to think about, well, what do you think the guy selling 1 billion ounces that day is thinking about? Because he doesn't have a hope in hell of producing it or delivering it. And therefore, I tend to look at the physical market. And there have been some very marked changes since 2000. I got involved in gold in 2000 because a guy named Frank Veneroso did a study wherein his conclusion was that the central banks were net sellers of 1,600 tons of gold surreptitiously, i.e., we had a shortfall in 2000 of 1,600 tons a year. Well, I've taken it from 2000 to today, and between the ETFs, who now buy on average 300 tons a year, that didn't even exist in 2000, the central banks who used to sell 400 tons and now buy 500 tons, the Chinese who just bought 500 tons this year out of nowhere, vis-a-vis the year before, the U.S. mint sales, 2000 versus today, the Canadian mint sales, and other examples like that. I can see up to a 2,500 ton net change in demand in a market that's basically had flat supply for the last 12 years. And I have to ask myself, well, where is this gold coming from? Because this is real physical gold that's being delivered. And my only conclusion is the central banks, the Western central banks, must be selling the gold. And that's essentially what that analysis was meant to prove, and I firmly believe it.
The mainstream media is kind of helped covering this up. And when I watched the interview, and I thought to myself, my gosh, if you're a reporter, and I mean, this is a monumental statement for a guy running nearly a $10 billion fund. The central bank's gold is likely gone with no realistic chance of getting it back, and they don't want to hear about it?
Right.
I think that is reckless and negligence journalistically that they didn't want to hear about it. What did you think in your mind when you started hearing the words gold bug and conspiracy theory on the set of Bloomberg?
Sure. Well, Greg, we get used to it, right? Anyone who believes that there's anything sinister going on is accused of being a conspiratorial type person. And in fact, when I left that interview, I thought, I should write a note on conspiracies. We've had so many conspiracies. I don't even know why people would think that they were unusual. We had the LIBOR conspiracy. We have people being charged with messing around with the electricity markets in California. There've been so many the whole credit default swap thing and packaging up junk bonds and trying to make them AAAs, which in essence was a conspiracy.
Yes.
So I mean, it's almost day to day that we have conspiracies. So I don't know why people find it so surprising that somebody has to come and present information which suggests there's a problem with the system. I could go back to the guy writing the SEC about Madoff, who suggested to the SEC that everything wasn't appropriate there, but it's dismissed. Okay, that's just the way we all dismiss it because we want things to look better than they really are, and they are not well these days.
Well, I mean, this for people who haven't read this thing that you wrote about 6 or 7 weeks ago, I mean, this was a long research paper with historical facts, sourcing, all kinds of other opinion, some math, some simple math, what mine supply is, and it came to this conclusion. And what does that mean for the monetary system in the Western world? I mean, if these folks have sold all their gold off to China or India or Russia or whoever, what happens in the next crash?
Right. Well, it's interesting, Greg. One of the things I couldn't comment on because there's no data is we don't know what private individuals have done, right? I mean, yes, we know the ones who bought the GLD and yes, the ones that bought the coins, but somebody who bought a 400-pound bar or tons of gold, whether it's a Mideast sheik or a Russian billionaire or myself or, the Texas teachers that bought 900 million of gold and Einhorn that bought 500 million, that's not in the data. But I can assure you, and I'm sure most of your viewers would realize, that since 2000, the number of people buying gold has increased dramatically. But when you buy 400-ounce bars, there's no record of it in the public domain. So I'm only dealing with the public domain. I can't even deal with the private domain, which I think would add significantly to that 2,500 tons.
How much are we short every year? How much are we short every year? Mine production is what, 3,700 tons or so? How much are we short?
Mine production is 2,700 tons.
2,700.
And ex-China and Russia, who don't export it, it's 2,200 tons. Now, you also have recycling, which is a very difficult number to come up with. Some of the people who write about these come up with numbers. I've never been able to believe or disbelieve the recycling numbers because it's a tough number to get a hold of. So the fact is that there's 2,200 tons from mines that are available for sale each year, and I've identified 2,500 tons of new demand that would be more than 100% of the mine supply.
Gold should be $5,000 an ounce.
It could very well be. But, of course, the reason it's not 5,000 an ounce is because the central banks, I think, have been selling. And that's what's kept the price down. They keep supplying this market with product in order to keep the price down so that nobody knows how vulnerable the situation is. And you asked the question, how vulnerable do these central banks seem? You would have noticed that there's a big to-do in Germany about the audit of the Bundesbank's gold. And where's the gold?
Glad you brought that up.
And they had to go to court to get them to do an audit. And meanwhile, I believe the Bundesbank has said to the Fed, we'd like to go see our gold. And the Fed has said, well, for security reasons, you can't. And Germany said, well, we're going to repatriate 50 tons of gold per year over 3 years. Well, 50 tons is nothing. I mean, we're talking about 3,000 tons of gold, of which I think probably 2,000 are not even in Germany. And they're going to get all of 50 tons a year. Now, that's a bit of a joke in the scheme of things. And recently, the Mexican central bank was asked to say where their gold was. And only 5% was in Mexico. And 95% was in London or New York. In India, they asked their central bank where their gold was. And I believe the number was something like 40% of their gold was not in the country. Which means it's with a central bank that I presume might have done something with it that the person who deposited there is not aware of, because there's been no audit done of the Fed since 1954. So I really do worry that the gold that is presumed to be at the central banks is not there.
That is an outrageous, scary, sickening statement. Not on your part, but my stomach turns to think, oh my goodness, what happens if there's a giant dollar sell-off? And then how are we going to go back to the gold standard unless the Fed has collected all this gold?
Right. Well, it's funny. I think there's even worse things than that one should worry about these days.
Like?
As an example, the Department of the Treasury every year does a gap accounting for the deficit. And Shadow Stats had pointed out that it's been delayed this year. It's supposed to come out in mid-December. Well, as you know, we have these fiscal cliff arguments going on, and they've now delayed it till late in January. And the estimate that Shadow Stats has for this year's real deficit, which is one, the actually reported deficit, and two, the increase in the net present value of obligations, will total $7 trillion.
That's stunning.
This is in a $16 trillion economy. And I can assure you that if it's $7 trillion this year, it'll probably be $9 trillion next year. Because these obligations are not funded. I'm talking about Social Security, government pension plans, military plans, Medicare. It's not been funded. And we have this cohort of people who are getting older who are going to want to make a claim on this. And when I look at that data, I just think, well, how do we get ourselves out of this mess, the economic mess we're in, let alone whether the gold's there? I mean, I think that's a way bigger concern that people should be dealing with that's not being dealt with today.
And what does this say for the gold price in the future? If the central banks, many central banks, in the West anyway, don't have it, what does that mean for gold?
I think it argues that gold is one of the few items in the world that can maintain its value. And I think what it says is the financial system is very vulnerable to some kind of event where people lose trust in currencies, as they are losing trust in currencies. I mean, if you and I were to sit down and say, what do you think the incidence of people losing trust in currencies has been going from 8 to 9 to 2010 to, you can just see that people are losing more and more believability in currencies, and we have all these printing things going on all over the place. I mean, essentially unlimited in Japan. We even have Janet Yellen, who might be the next chairwoman of the Fed, suggesting we shouldn't even put a termination date on the printing anymore. So I don't know why people can't accept that there is a serious vulnerability in the financial system as we see it. The fact that we accept that you can just print money and buy bonds, it kind of blows me away that the bond market just wants to play the game. They want to fade the Fed and not really deal with the issue, well, are we ever going to get real money back? And I suspect they won't get real money back.
Obviously, you think there's going to be some sort of collapse or some sort of calamity. What's your time frame?
Well, Greg, you can't tell because, we nearly had a situation in 08 when Lehman went down. And the Lehman event is a very unusual event relative to recent history. And the unusual thing about Lehman, it was a liquidation. They allowed it to liquidate. So we got to see what things were really worth in a liquidation. And it nearly took the system down at the time. As the rumors going around where we were in hours of closing down the banking system, credit was seizing up. You couldn't get credits to ship goods at the time, and we had to have the TARP and TALF programs initiated. Since the Lehman event, the central planners have learned we cannot allow a liquidation anymore. Ergo, Fannie Mae was put in their conservatorship. Freddie, AIG, Bankia, Dexia, all the banks that fail on Friday nights in the States are always taken over by somebody. So there's never a liquidation allowed, because a liquidation, I think, would truly determine what assets are worth in the environment we're in today. And it's not allowed to happen. Now, how long you can keep doing that, keep papering things over. I mean, we keep papering over Greece now. We're papering over Spain. And the minute Spain and Italy were having troubles with their interest rates, well, along comes Mr. Draghi with his ONT to kind of delay the recognition of the real problem. When it ends, I don't know. All I know is that people have to deal with the facts. And like I say, what's my safest alternative here to make sure that I can preserve my purchasing power? And if I had to, compare owning a government bond, a 10-year bond that yielded 1.5%, or owning gold that's gone up on average over approximately 15% every year for 12 years, including this year now up 11 or 12. I mean, that seems to be, to me, the most obvious choice that people should make, particularly if we have a shortage of gold, which I firmly believe we did, and that's what the purpose of that article was.
We have a shortage of gold.
Yeah.
All right. Eric Sprott, Sprott Asset Management. Thank you for joining us today on USAWatchdog.com.
Greg, my pleasure.